What's up, everybody, to the High Performance Trader Weekly Recap. Today is 5/18/2024, and today we're going to be breaking down a bunch of trades we took this week. Market conditions have been pretty insane, pretty wild, right? But today I want to break down, really dive more importantly into the way we read the market information, right? But we're going to break down the week. First things first, right? Some things that I want to take a look at, right? So in the weekly newsletter, right, that I send out every single week, I was watching, obviously, previous all-time high, which was at 52585. I was watching structure right here at 520, right? So market conditions have been very bullish, right? We see this on larger time frames. And what's most important to point out, right, is, so wait, hold on real quick. It was right here. This was Monday. Monday was right here. Correct. Okay. So market looked like this. Monday, Tuesday, Wednesday, Thursday, Friday. Yes. Okay. So market looked like this at the end of last week. So in my newsletter, right, I'm highlighting structure over here at 520, right? This level is very important because it was an area of resistance, which we're now above, right? So real quick, let me move this here. Okay. So what I really wanted to point out in the newsletter was any buying acceptance above this level. I got upside targets of all-time high and above, right? So the old Josh, right, the old trader, would really be focused on this all-time high level, right? This is an area of resistance. You can call it a supply zone, whatever you want to call it, right? I would be more focused on shorts up there, right? Because that's the age-old adage of I'm going to predict the market and figure out where the high is, right? And then I'm going to short it. And on the flip side of that coin, what happens when I'm doing that, right? What happens when I'm doing that is I'm missing the market information. I'm missing what the market's actually telling me, right? Instead of going, hey, listen, I'm going to be patient. I'm going to wait and see how price reacts up here at the supply zone, right? Instead of that, we're looking at it as if sellers are going to be there no matter what, and it's going to limit my ability to read the market information properly, right? It's going to cause me to look for short plays when in reality the market may be bullish, right? So that's what I kind of highlighted in the newsletter. I was like, hey, listen, we're approaching this level. We're above 520. Right? Look at how price is respecting the moving averages, right? This is the tools we use to identify trend, right? And that's like one thing I used to struggle with in the past, right? It's like, what do we actually use the indicators for, the moving averages, right? It's not a way to predict price. It's a way to measure the price right now, right? So that's kind of where I was at with that. That's what I was going to, and that was the mentality I had coming into this week, right? So we're just going to run through real quick the week, the trades we took. You know, what I call an edge, right, and what I was looking for. So Monday, right? Monday, this is 5/13. Hold on real quick. Monday, Tuesday, Wednesday, Thursday. Right? Yes. Okay. So notice here, right? I have that level, that 520 level, right? Once again, if you go. No, I'm not. Thank you, Novak. Thank you. All right, let me do that. That will help. Okay. Boom. Okay. So once again, right, let me whip out that 4-hour time frame. And you're going to see this level right here. This is 5/19/58, right? So this is just a level I pulled from the previous week. And last Friday, we closed above it, right? Which is pretty bullish, right? This is a break of structure just on a larger time frame. So going into Monday, right? Let me whip out this 1 hour. Okay, so going into Monday, right? Friday, look at, you see we respected it once, twice. We got that little pop up. So going into Monday, I'm pretty bullish, right? I'm like, okay, price is moving up in pre-market. We got all-time high up here. The way I'm looking at it is this is going to be a price magnet, right? So I'm going, okay, what do I need to see to long the market into all-time high, right? That's my bullish scenario. My bearish scenario is previous day high gets respected, right? And we can't make a new high, right? So notice here, price rips right into all-time or previous day high. Let me whip out the 5-minute. And this is why I love that 50-50 perspective, right? Because that 50-50 perspective is going to help you make the right decision here and go, hey, listen, either buyers or sellers are going to defend this level. If buyers defend it, I'm looking for longs targeting all-time high, right? But if sellers defend it, what does that look like? And now over here on the left, I got the 1 hour time frame, right? And this is where I use that moving average, right? That 9D EMA, right? And go, listen, how is price respecting it? Is it respecting it in a bullish fashion or a bearish fashion, right? And I keep it really simple. Is it closing above it? Is it closing on it? Is it extended, etc., right? So once we start to come up into previous day high, you can see the selling was really extensive, right? Really strong selling, large red candle, breaking structure in pre-market, right? So pre-market is always going to be a guideline, right? Pre-market is the levels you want to watch because it's another area of the market where you can gather information from. Okay, you'd be like, okay, this is structure, right? Bullish structure is we're making these highs, we're making these lower highs, and then boom, snaps, right? Notice the moving averages here, right? So the moving averages all cross. Now, I'm not gonna put too much significance on this, right? Because I don't like just entering just because moving averages cross. Maybe one day I will, but right now that's just not really where I'm at. But I will still use it as a indication that buyers are not as strong as they were, right? I will see something like this and go, okay, where's the critical level? Critical level's up here. It was respected, right? How was it respected? Sellers defended it. Okay, where's the cloud? Where's the 9, right? Notice this candle opens above all of them and closes below all of them, right? It's very bearish. Just what Todd was talking about last week, right? We literally opened above, closed below, right? And now price starts to come up and starts tagging moving averages, right? Now, I was not able to get in short here. I just missed the cloud, right? And, you know, my strategy lately has been trading kind of with the cloud, so missed the trade. Price then comes up to the cloud. And by here, so this first candle closes at 10 o'clock, right? So right here, prices, this 1 hour time frame candle has just closed. Now I'm going to ask myself, where is it? Did it close on the 9? Did it close above the 9? Did it close below the 9? Right? We're rejecting the supply zone. We're closing below the 9 DEMA. And now we're coming up retesting the cloud. Right? So this is how I've been trading the market, right? I'll go, okay, this is what's happening on the 1 hour. Now the move has manifested, right? It's materialized. I'm going to take this short off the cloud, and my stop is going to be above the cloud, right? So we take the market short here at 521.80, right? Right around this level. Right when it comes up, I probably got in this short around 521.68. And now my stop is going to be 522, right? So I'm able to account. Hold on. I'm able to take this loss without being hurt. It's the most important part about trading. Risk, reward. I'm willing to take this loss to make this gain, right? This is what I call around a 1-to-1, right? This is our starting off at a 1-to-1, right? We had downside targets. End of day was down here at 520.86. This is the most important part about trading, not many people usually talk about. When you're entering a trade, you have to ask yourself, am I willing, where can I get in a trade and accommodate some drawdown that makes sense, right? Also, I think it's pretty cool to highlight the top of this candle is a great stop as well. But the cloud, that, like if I wasn't trading with the 9 and 20 EMA, that's probably where my stop would be, right? My stop would probably be right here at 522.07. Because this is the last place that seller showed up, right? The seller really showed up strong right here. This is the last place buyers tried, right? Buyers tried they tried right here. You can see the wick. And then price comes up, right? This is what, on the 2 minute, you'd see some green candles there per se, right? So this is what I'm willing to risk, and I'm willing to target 520.79, about $1 move. And I'll be able to take my 1-to-1 at the lows. Now, where is it? Oh, hold on. There it is. Okay. So now this is where the power of the cloud comes in, right? The power of the cloud is trend, right? So when I took this short, I mean, candles were green. We're above the 9, right? You know, obviously in the back of my mind, I'm going, oh, buyers could show up. Conditions are very bullish. You know, how do I know they're not going to? It doesn't matter, right? You have to ask yourself, what's your criteria for entering? My criteria was closing below the 9. Closing below the 9 on the 1 hour tells me this supply zone was respected, right? It tells me the seller here was strong enough to wipe out this beautiful, healthy trend that was prior to it, right? So that's when I say criteria, that's what I mean. I mean, I was willing to take the information of, I was willing to look at the supply zone, I was willing to look at this candle closing below the 9 to validate the supply zone, to then go, hey, I want to trade with this cloud, targeting downside targets. So boom, take the market short, stop right up there, and then price starts to play around with the 9, right? And all this is okay, right? Like all this right here, I mean, I'm juggling like a 10% gain to 20% drawdown right here, right? I'm going, okay, I'm up 10, I'm down 20, right? And this is where we have to remain extremely objective to what the market does usually, and is it still doing what it usually does, right? And what I mean by that is the market still respecting structure, right? Like this pre-market level, 52187. I mean, this was a perfect stop as well, because if price could hold, keyword is hold, above 52187, that's very bullish indication. If I'm bearish and I'm in a short play, that's the last thing I want to see, right? So that's where my stop is. So I have to be okay with price just messing around right here, right? I'm still okay with it. I'm okay. It's doing its thing. It's going back and forth. This is what we call the battle, right? Buyers and sellers are kind of going at it right here. My stop is right above this level, and then price rips down, respects the cloud very well, right? Where we then trim our position right here. Now, trimming is a really important thing to talk about, because trimming a position, right? When you trim a position, and based on what's happened to me in the past, if I'm going to trim a position, I'm basically making an agreement with the future going, okay, I'm okay with price. I'm going to hold on to this, but the price I'm going to pay to hold on to this is going to be above the cloud. I'm willing to pay, right? So say I enter this trade, 2 contracts in SPX. I sell 1 contract for around 28 to 30% return. Now, I have to be willing to give all the money I just made back to hold on to this, right? Because if I don't look at it that way, I'm not gonna stay in the trade where I should. I'm not gonna make the proper decisions, right? If I go, oh, I'm gonna trim, but I'm only gonna allow X amount to go against me, right? Then I'm basically giving money back away at that point, right? Because the market's probably gonna juggle. So trimming is one of those things, right? And what's worked for me in the past is, like I said, if I'm trimming, I'm accepting, and I'm making an agreement with the future that I'm okay with giving money back, as long as it holds the trend. If it continues to hold the trend, then the trim made sense, right? And I also like trimming, for multiple bunch of reasons, right? But 1's to relieve anxiety, 2 is to lock in profits, which is the goal, and 3 is it helps keep me objective and go, hey, listen, I'm going to hold on to this trade, but to hold on to it, there's a price, and the price is above the cloud, which is then invalidating the trend. But I love how price respected this cloud. It was a battle for sure. But I like going through these battles because this is the reality of the situation, right? When we have trades that just work in our favor immediately, it tends to alter what we think is realistic, and that can be detrimental to a trader, right? Like the next trade I'm going to show you. But this thing just started to sell off very well, and then even like right here, right? I'm still holding this trade, right? So you got to think the market's doing its thing. I'm monitoring the trade on the 1 hour, right? This gives me tons of conviction to stay in the trade as well, because we're closing below the 9 on the 1 hour, right? Closing below. end of days down here at 520.79, right? So when the market looks like this, I'm like, oh, it's coming. It's going to hit my target. And then it comes up. And I'm like, oh, right? This is one of the most frustrating things as a trader. When you literally are, what is this? 20 cents away from your target. And this happens. Boom. And this is why I'm thankful that we now trade with the 9 and the 20 EMA, the cloud, because this is still okay for me, right? When the market looks like this, I'm like, dude, this is still okay, because until these moving averages get invalidated, this trend is still valid, and I want to be in it, right? And you can see, look, comes right up to that cloud, respects it. This would have been a great spot to add. I think I put that in the Discord, but I didn't add. That would have been a great spot to add in. And then look at how price literally comes right to EOD, tags it, right? And then we got that mega sell-off. I did not sell on that candle. I sold on this candle, which is okay. It is what it is. But just love watching the dynamics of the market. Boom, sells off, comes up. And then I step away, right? Cool, great trade, put on a good trade. And then I'm going, okay, what's the 1 hour 9 telling me, right? The 1 hour 9 still being respected, right? And you can even notice here, like, look, price came up and tagged it right here at, like, on this level, at this tag right here, it was literally this retest of this structure point, 52187, literally lined up with the 9 DEMA perfect on the 1 hour. Once again, I don't know how this happens. I don't know. It's insane that so many things can line up, right? And that just leads me to believe the market's governed by certain principles that just respect themselves. And better we get familiar with these principles, the better traders we become. But look at this. I mean, it lines up perfectly with the 9, perfectly with structure, and then sinks. So I'm gonna remain bearish here until we get above this 9. Right? This 1 hour 9's been respected. I want to continue to trade with it. I do not want to trade against it. Right? So price comes into end of day right here. We get some buying. Right? Now, it's starting to kind of look bullish, I guess. I mean, structure's starting to, bearish structure isn't holding the way it was. So in my mind, I'm going, okay, we got, open print way up here. But once again, I'm not shorting this until we get above that 9 DEMA on the 1 hour. So my framework is still bearish. I'm still looking at the market in a bearish lens, going, where do buyers need to lose for me to get back in this short? Right? So there's a couple of different spots you could look at, right? But I really like this one. This one stood out to me. Notice the wicks right here on these candles. Wick, 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 wick. This guy right here. So the top of this candle right here is at 52147, right? So that's the way I like to read my structure, is I literally go, where's the previous seller, right? Which is at, like, if the market looks like this, our next seller's right here at 52146. Just the top of that wick. And I go, okay, if I can identify some weakness here, I'll be willing to take the market short, targeting PDL. That's our next market imbalance, right? Which is all the way down here at 519.60, right? We got some gaps here in pre-market too that I want to see get filled. So if we can get any sort of selling that's respected here at the 9, I'm willing to get back in this. Once again, just like this retest of the 9, look at this retest. Bam. So you see here on this chart, you see those two little circles. That's literally the retest of the 9. Or I'm sorry, this one's right here. No, it was right here. Okay. Boom. Retest the 9, retest the 9. Boom. So once I start seeing that buyers aren't holding this, I'm going, okay, where can I get in a short and where can my risk be? So now I'm going, all right, does this look strong for buyers? No. Okay. I want to go short. I know end of days right here, but I'm not going to let this keep me from shorting the market. I'm going to be like, okay, yeah, end of day is there. But once again, if trend is holding the 1 hour 9, I want to trade with that. See, in the past, what would happen to me is I would go, yeah, I'm bearish, but end of day is right here. I don't want to, it's my target's too close. So then my framework would then go from bearish to bullish because a bullish target made Josh happier. A bullish target made me, quote unquote, more money because it's further away. But this is the thing. If your bullish target never gets hit, you're now losing money. This is why our beliefs are so important. Because if my decision-making process is based off how close my target is, I'm not going to make the correct decisions. I'm going to, instead of shorting, I'm going to go, oh, end of day is right there. So I wouldn't like that trade because I don't want to fight these buyers here. So I'm just going to target open print. That's a great trade. You know, and I don't know if this happens to anyone else, but this happens to me constantly. So now, instead of that, I'm going to give my 1 hour 9 more significance than where my closest target is. Right? Right? I'm not going to sit here and go, oh, I don't want to short this because end of day is only 40 cents away. In my mind, I'm going to go, okay, that's just my first target. That's a 1-to-1. I'll take it. I'm going to give the trend more significance than my target. So once we then fell below 52120, which was that pre-market structure, yeah. We came up, retested that cloud. Let me get rid of that. Came up, break below the cloud, fall, tag the cloud. Notice, closing below the 9 on the 5-minute, this candle, boom. In this short, stop at 42140. Caught a beautiful move to the downside here, right? It didn't hit? I don't think it hit PDL. But I took profits on this trade. It was just go, 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 go. On SPX, you have to, when something like this is happening, you have to have your hand on the sell button. You got to be ready to get out of this because the difference between your premiums will literally go up to $1,200-$1,300 right here, and then at the end of this candle, they will be worth like $600, right? So you will lose more than half your position on this pullback, right? So once again, quick scalp to the downside using that 1 hour 9 and market structure right there. So that was a really good Monday. Started the week off right. I was really proud in my journal about that day. I was really, I didn't act biasly, right? I was acting strictly off the market information. I was really happy too about this trade right here. I mean, obviously it was a really good trade, right? It's like 158% return. But the real reason I was really pumped about this was the fact that I didn't let that EOD close target keep me from taking it, right? Like that's a big one for me, right? A big one for me is I will literally talk myself out of the information the market's telling me because I don't like the target. And then I'll end up putting on the trade and be like, oh man, what was I thinking? Why would I do? Of course it was going to, you know what I mean? So, yeah, so I was really good for that day, really thankful for that day. All right, let's go into, it was Monday, let's go into Tuesday. So Tuesday, market looked like this, pre-market, right? Once again, we're playing the pit numbers, and we are going to watch these supply zones, these demand zones. We're trading in this range. I was going to use end of day, right? End of day is 520.91, right? So I'm obviously going to use that. And in the pre-market plan, I'm going, whoever can control end of day, I want to trade with, targeting previous day high, which is all the way up here, and so on and so forth, right? So that was the pre-market analysis. Okay, so really nice retest here off end of day in the morning. I did not get this. And then the market is just kind of going all over the place, right? It was going up, it was going down. It wasn't respecting the cloud. It started to respect the cloud. By the time it respected the cloud, it was literally ripping all the way into 5225, right? And then we started to get some strong selling, right? Now, at this point, I wasn't ready to short the market because we were holding the 1 hour 9, right? Now, it's up for debate, right? Because this is a pretty large topping tail wick, I think they call it. It's been rejected is what it's telling us. But I really wasn't quite ready to short the market. So we came back above the cloud, and this is where I first took the market long. So I longed the market right here around 52155. I had a really solid entry on this trade. Got in like right around here at 5217, looking to target the highs, right? And then we got a really nice push right here, right? I probably could have locked in a 1-to-1, but I didn't, right? I was looking to target the highs, and then that seller came in, right? And I really want, this is actually a really good example for our 50-50 perspective, because this happens constantly. So we got pre-market high right here as well. Pre-market high is at 52144. Buyers respect the cloud, price rips, boom, reject. Stop out of the trade, right? Take the L's. Notice this candle right here. Beautiful, bullish, long the market, whatever. Could my analysis been better? Sure. Always can. Doesn't matter. This is my edge, taking it. Stop below it. Boom. Look at this candle. Wipes out the lows of this candle. This right here is so important to be able to see, right? Like, how many times have we been long right here, right? Obviously, this is a scenario where I was long. And then this happens. Boom. Right? Now, we have to get good at seeing what these candles look like, what it's telling us, right? If this is starting to look bullish here, and then this happens, boom. It's a very good sign, right? This first candle, that the market's reversing, right? So stop out of the trade, right? And then the price drops and comes up and tags the same level I just stopped out at. You got to think, a lot of people long the market right here, they're getting out right here as well. This is what constitutes the shift, right? So this is where I was next. In my mind, I'm going, okay, if we get a retest the cloud, I'm getting in this short. And I'm going to now short the market, targeting the lows, right? So my first low was right here at 520.64. Price comes up, tags the cloud, take the market short, stop right where you level of structure from this previous cloud. Pre-market high would have been a good stop as well. Caught a nice little move down to the lows here, boom, where I then trimmed the position here and stomped out of the position right. Oh, I actually stayed in this until this candle right here. I got stopped out of. And I'm still playing around a lot with the clouds, how to take profit, how long do you let it go, right? And once again, though, this is a good point to be like, okay, if I'm going to hold this trade, I have to be willing. At what point am I going to go, okay, price is no longer doing what I, quote, want it to do, right? And for me, that was on this candle right here, which was a perfect, if this is open print, look at this. Break above. See, after that trade, holding this just kind of gave me it was like really strenuous on my brain. So I like got out of this, I walked away. And then as I walk away, this thing goes, rips up, comes down, tags open print flawlessly. This right here is perfect criteria for long. Just so I want everyone to burn this into your brain, right? Like this right here, break above the cloud, retest the cloud, holding the cloud, holding the 9, off open print. Look at the volume here off open print, right? It's so cool to see because it just solidifies what we're doing, right? Look at how the volume starts to pick up a bit here, right? Just beautiful shift in conditions right there. In a nasty move to the upside, right? So I did not get any of this move, but I was able to capture a little chunk right here. Nice scalp on SPX. And once again, the biggest reason I felt comfortable with that scalp is if you look, once again, the 1 hour 9, we got back above the 9, right? This was very bullish. So I wanted to trade with, if I'm looking at this chart, maybe it's just because I've been, looking at it like this for a while. For this to remain bearish, we would not have closed on or above the 9 here, right? I'm not saying it could have 100% had to go up. I'm just saying the fact that we closed below the 9 here and here, but above the 9 here, it's usually a very bullish indication. Couple that with off open print, it's usually telling you that the market's going to rally at least up into the highs, right? And then you have to ask yourself, how are we approaching the highs, right? Like, are we approaching it, bearishly? Are we approaching it bullishly, right? And using that with the moving averages on the 1 hour, right? And now I need to find my entry. So if you look over here on this chart, I wanted a cloud retest, right? I didn't quite get it, but once we got this, anytime you get large, like, fluctuation in price, like price literally rallied like $2.50 right here, and it's the DEMA on the 5 minutes, like, holding very well. This is usually an idea. This is usually a really good indication market's going to keep going. So, and I was willing to put on risk, right? Once this candle started to pop and it went above this candle, this is where I then entered the market long because my risk was right here, right? So that's where I felt like I could find the best risk reward. Even if it was just a move up into 52272, I was okay with that because once I'm only risking 20 to make 30, risking 20 cents to make 30 cents, right? Our risk reward, right? And once again, not letting the close target keep me from entering the trade, right? And, the old Josh would have been like, oh, dude, I don't want to long this into 52272, this supply zone. I'll just wait. Well, if I waited, then my entry would have been completely different, right? So, not letting that affect my trading has been working very well for me, right? Be more focused on what you're seeing than what you think may happen. So that was Tuesday. And then Wednesday, right? All-time high breakout, right? This was a really good day right here. This was a really good day. And I actually just made a video on this day. And there's a couple things I want to point out. Okay, so we're ripping pre-market. I think there was CPI or PPI news or whatever it may be. A lot of volume came into the market pre-market. Now, notice, right? Now, first thing I'm going to whip out is that 1 hour again. So if you look at the 1 hour, look at how we bounced off the cloud, rallied, right? But when price is all the way up here, like when price is up here at 52687, there's two things that can happen, right? It could rip, three. It could rip, it could consolidate, or it could go down. Now, I wasn't able to get in this in the morning, right? I'm not a big 938, get in the market sort of person. So this thing rips right into pre-market high, starts to sell off. Now, rejecting pre-market high, closing below open print, that's really bearish. There's some people that shorted that anticipating the gap fill, right? That's another belief that we have to be debunked, right? Because sometimes we think, oh, gaps always get filled. Yeah, they do, but not when you want it to. You know what I mean? Like gaps, yeah, they get filled. There's a high chance, but it's not where you want it to happen, right? It could be later. It could be the next day. It could be next week, right? So like, in my mind, I'm going to be more focused on the 1 hour 9 because in my mind, I'm going to go, listen, as long as we're above this 1 hour 9 and we're not super extended from it, I'm going to be looking to play longs, right? So I'm going to disregard any short. I'm going to be like, I'm not really ready to short the market. Will I miss opportunities thinking that way? Maybe, but it's what works much better for me. It keeps me really aligned with the overall conditions of the market I need to be worried about as a day trader. So notice how price dips right down, right? And then out of nowhere, we get some really intense buying, right? So initially, I was looking for a retest off previous all-time high, which was right on open print. So I'm like, if sellers can defend this, I'm open to a short play. But buyers ripped right through it. and then we came down, got this retest of the cloud, right? And in my mind now, I'm watching the 1 hour too, and I'm going, dude, this is a really healthy relationship right here, between price and the 9 on the 1 hour. And this is what I look for constantly, because if this chart on the left is healthy, you can then find a healthy trend on the chart on the right. Right? If this chart on the left is unhealthy, right, it's telling you that for a reason. So, price rips, comes down, tags the cloud. I long the market on this candle, this red candle. I'll show you on the 2-minute where my entry was. Exactly. So my entry was on this candle right here. Now, could I have had a better entry? Of course, you always can. If you ask me, this candle would have been the perfect entry. But when the market looks like this, you can't not take setups because you don't think they're perfect. But you can take setups because they're not perfect, if that makes any sense. Right? If I'm constantly waiting for the perfect setup, I'm not going to take many setups. Does that mean be extremely, disciplined? I mean, have discipline, but don't be unprofitable about it, right? Don't not put on setups, right? Go, okay, the 1 hour time frame gave me conviction. It was respecting the 9. I liked the relationship it had. I liked that open print was just invalidated. And I wanted my risk to be below open print, so I was okay with getting in right here, right? If I then waited for this candle, got in at 526.30, I really wouldn't want to hold for a 60-cent drawdown, right? Because that's going to be around 35-40% drawdown, and I don't really like that much drawdown, right? So be more focused on your risk than your entry, right? So I took the market long right here. My stops below open print, and then the market really took off into pre-market high, right, where I did a trim right here, and then it rips above pre-market high, comes down, tags the cloud. Actually, it did not tag the cloud. Got really close to it, and price just really rallied right up into 528, where I took profit and stepped away for the day, right? So this was an amazing trade. Looking back, I should have considering the conditions we were in, it definitely would have made sense to look for some more retests, right? Or some more entries. Take a look here on the 1 hour. Just look at how it's respecting the 9 the whole way. The whole way, right? If anyone learns anything from me, let it be the 1 hour 9. The 1 hour 9, if you could learn to use it properly, it could be a mega edge for you. Because when this is red right here, at one point this was red, but it was coming into the 1 hour 9, right? So when this is red coming into the 1 hour 9, it looks like this. So now my framework, my lens is going to remain bullish. And so instead of going, oh, sellers are coming in here, I'm going to go, oh no, at what point do I need price to go to tell me buyers are stepping back in, right? I'm going to have the right mentality because the right perspective, because I'm trading with the 1 hour trend, right? Which is more than my friend. It's my guideline. It's my main, it's what I watch because it helps me understand what's going to happen in the next 15 minutes, right? That's the way I really like to look at it, right? My job is to figure out what's going to happen in the next 15 minutes, 30 minutes to 1 hour, right? Or for the rest of the day in this case. This thing just kept going, respected the cloud pretty much the whole way. So really, really good day on the market. Really good day on the market. These 2 days really helped me. I did very well on these 2 days, and it really helped me for the rest of the week, right? Because we'll get to these right here, right? So this day, Thursday, I was not able to capitalize on this. I want to take a look at it, though. on the 1 hour. So price comes in at end of day, right? And we get a beautiful retest here off end of day on this wild wick of a candle, right? Right, and I wanted to long this, right? Initially, I was kind of bearish, below, where was it? 530, 33. I'm trying to figure out why I was bearish. Oh, was it? Hold on. I guess it doesn't matter, right? But anyways, price comes down, tags end of day, open prints right next to it. I know previous day high was right here as well, right? So you have 3 critical levels that just came down, ripped through, and then price starts to rally off of it, right? Now, I missed this entry because I had to step away and make some sandwiches. But this entry, right? I mean, look at it. Rip above, come down, consolidate for a little bit, but we're still above the cloud, right? And this is what the cloud really helps me with, right? Because if we're above the cloud, you know, in this scenario, right, buyers respected the open, buyers respected end of day, price just ripped, comes down above the cloud. Yeah, we didn't get a perfect retest of the cloud, so that probably would have been kind of a hard entry. So if anyone missed this, I don't fault them. And now price is coming up, right? So now I'm going, okay, I like these conditions that are relatively bullish, and we're getting this little pennant. So now I'm going, okay, I'm willing to trade with these conditions still. I'm willing to put on some longs if buyers can respect this cloud. Now, back in my journal, I said this too. I go, where I went wrong on this trade is, let me get rid of this. Oh, hold on. So notice the 9, right? The 5-minute 9. The 5-minute 9, we fell below it. We're closing below it. We couldn't get above it. Right, so anytime a moving average is being respected, we have to watch that. We can't disregard that information. Went long, stopped below the candle, couldn't get above the candle. Price falls, rips down, right? So hits me out, stomps me out of my trade. So now I'm going, okay, this pennant just broke. I got end of day down here. If I could get a setup here, I'm willing to short the market back down into EOD. Okay. Price rips up, comes tags the cloud, enter short, right? And my stop's going to be like right around 530.90. Now, this is the thing. It's around 12 o'clock. SPX contracts with low volume, right? Like notice here, right? Volume's kind of high right here, and then it kind of dries up, right? So my contracts are going to, you know, it's going to diminish the value of them, right? So if I'm entering right here, I probably got in around 530, 60, right? 61, maybe a little higher. For whatever reason, I didn't want to keep my stop above, I literally write in the Discord, 530.58 is my stop. Or I'm sorry, 530.85. And, you know, I guess you could say I was being a bit ignorant there because we had pre-market high right there at 530.90. And you have to ask yourself, right? Like, where was the last seller, right? Last seller was right here. You should, you know, I'm not going to sit here and say hold until the top of this, 531, but be aware that price is still bearish until we get above it, right? So, one second. So anyways, I shorted this, got stomped out on this candle, and then this thing just rallied to the downside, right? So it was pretty sickening. But this is, you know, this is what happens when you make decisions based on P&L instead of market structure, right? So the right thing to do right here is most likely. I mean, obviously follow your risk reward. If you don't want to lose more than 30%, don't lose more than 30, right? I'm not going to tell you to do that, right? But when you make that decision, be aware that if you want to get out at 30, be aware to the fact that you might get out and it still might go in your favor, right? So, but figure out where that is, right? Don't just hold because it, Josh said it might come back based on structure, right? Just, you have to be able to go, okay, am I willing to risk 40 to see if it works? If not, get out of the trade, right? So that's kind of where I was at. Yeah, it was definitely heart-wrenching. So that's okay. It's the game we play. Those premiums literally skyrocketed. And look, it literally rips all the way down to end of day, completing the trade plan. And this is what I love, right? I'm reading A Disciplined Trader again, and he literally goes, the market's always right. You just play in it, right? So I could come up for whatever reason why this should have worked in my favor, why I expected it to, the beliefs behind it. But all of that's irrelevant. What's relevant is the market's going to do what the market wants to do. I have no control over that. I'm just a player in this game, right? So these sort of things happen all the time, and the only thing we could do from it is go, all right, how could I have done better, right? And maybe there isn't a way to do better, and that's fine, right? That's just the game we play, and it's, that's all there is to it, right? What we think should happen, what we want to happen, it's really irrelevant in the scheme of things. We're just here to identify opportunity. And then that leads us to Friday. Friday, I took 3 losing trades. And looking back, it was just a choppy day. There really wasn't much price action. I mean, look at the 1 hour here. It didn't get much price action whatsoever. I don't know if it was because we were live and I wanted to, once again, right, I want to have a great day because I'm live, right? And it's like, listen, the market doesn't care about your feelings. It doesn't care about what you want or expect or think should happen. It doesn't matter what you rationalize. It doesn't matter what you don't rationalize, right? The market's going to do what the market does. And the reason why I'm just really stressing that is risk reward, right? Because if I didn't demonstrate proper risk reward earlier in the week, right? Like if I was just taking profits very quickly, it wouldn't have accounted for the losses I took these 2 days, right? So really, I know we could break down 1 to 1, 1 to 2, 1 to 3 on, a day by day thing. But once you start getting to month by month, right, you really want to really focus on, okay, how much money's coming in, how much money's going out. And you have to be able to be aware of the fact hey, I can't just take profits when I want on winners. I have to trade the process. Otherwise, I'm limiting my potential profit. So anyways, right, I was looking to trade the cloud here. It was really choppy. I was looking to trade with the 1 hour 9, which you could see it just wasn't, it was just a day of consolidation, right? So took a short here, got stopped out relatively quick, and then price came up, retested this level. Looking back, it didn't tag the cloud the way I wanted it to, right? But this is one of my favorite setups. I was willing to take it, and then it just turned, boop, stopped me out there. And then that's where I hopped off, right? And then looking back, came up, tagged the cloud. Even this move right here is literally only 60 cents. So price just really kept fluctuating all over the place. And then we got a really nice move here off open print. I did not capture this, but I went back and looked at it. It was definitely beautiful. Just wanted to talk about this real quick. Look at this chop, 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 chop. And this is the thing, though. At what point do you go, oh, it's not going to be chop anymore? It's hard to determine. And that's why I pretty much walked away at this point because, this back and forth price action, I don't want anything to do with this. And if I do, I want to be super aware to the fact that I need to be super quick with my profit taking. I must get out at the critical levels. But look at this off open print, right? We get that nice sell, retest, fall below the cloud, comes up, retest the cloud, right? This would have been a really good spot to short the market. Maybe on this retest right here and capture a little move to the downside, right? But it's not the case. But yeah, so that wraps up the week, guys. It was a phenomenal week, right? Right. But the biggest thing I want to take away from this week, right, is the market is going to do what the market is going to do. We are never right. We are just playing the game. We're just identifying the opportunity. The market is ripping right now, right? And the current state of the economy is terrible. Doesn't matter. The market is going to do what the market's going to do. We're just players in this game, right? So just focus on a way to determine the next, 15 to 30 minutes in the market, and be focused on how you can minimize your risk and capitalize your reward. So I hope everybody has a phenomenal weekend. Do your journaling, break out the books, Disciplined Trader. Let's crush this next week. I'll see you guys there Monday.